Welcome folks, in my last weekly analysis video, which was basically here, this was Friday, okay, the last weekend, I said that we would come down, okay, and I gave you a target of 2,800, right? I said we'd go up. We didn't reach 2,800, right, which is right there. We got pretty close. We got to 2,790. Then I said we would see some level of a pullback, which we got on Thursday, I think that was, okay? So I'm pretty excited. The market moved in alignment with my expectation. Okay. Now let's talk about Friday's trade, right? I want to talk about Friday and how you could have identified a setup. But before I do, I want to show you how important these wicks are. I gave you this level. So I took the midpoint of that wick. We came straight into there. Okay. That's what I said we would expect. And that is where we found support. I mentioned that we may find some resistance here, right? But we went straight through. So we were approaching that 2,800, which is what I had anticipated. Then I want you to look at, if we drew the same midpoint on this wick, this is where on that move down, we have found support. Okay, and we started to kind of move back up. Now I will do a separate video in terms of what I expect next week. That'll be in a separate weekly analysis video that I'll post maybe tomorrow, or for me today's Saturday, so maybe tomorrow Sunday, or maybe early Monday morning. Okay, I want to jump down into the 15-minute chart and talk about a couple of things. Okay, now there's been some questions about dealer's range. I have spoken about dealer's range in a video prior to this, and there's a question about how to identify what that dealer's range is. So the best way to do it is to look back and identify the major swing high and swing low. Okay, so on this chart, the major swing high will be that high there. Okay, and this will be the major swing low. Okay, we don't use this one, right? Because the one next to it is slightly higher. And that is just, that one there is just within that swing high. So that little one there is part of the move that started with that swing high on the left. That's why I'm using that one, okay? So what we're trying to do with this dealer's range is identify where's premium, where's discount. And the way we do that is we take our fib tool, and all we're doing is trying to identify where is the halfway. So I take a click the high, click the low. I'm going to change the color, okay? And that there is the midpoint. So now that we have the midpoint, anything below that midpoint is discount pricing. Anything above that midpoint is premium pricing. Now, what do you see here? You see that the market has come up into premium, into this fair value gap, and has found resistance. That is also the high of Friday. So that's important. Now, how could we have traded that with that information? Well, you can see this up candle, okay, that is our bearish order block. Okay, that high candle is our bearish order block because that has taken all the liquidity on the left. Now, what's important though is we don't simply just short just because we see an up candle taking liquidity. You'll see that everywhere. What's important is that you get an engulfment of that candle. That engulfment is the change in the state of delivery of price. Okay, that engulfment needs to engulf that entire up candle. As you can see, it's done here. Then what I like to do is I like to take the midpoint of that bearish order block. You see how important midpoints are? Okay, I take the midpoint of that. Now let's make this one yellow. Okay, and you can see, what I like to see is I want to see price now just stay within that midpoint, as you can see, has been the case. Now, what's also important on this particular day, which is last Friday, 1st of November, we had news at 10 a.m., so I don't want to be in front of the news. That news candle is right there, okay? So I would like to wait 5, 10, 15 minutes after the news release before I enter into any positions. So inside of that 15-minute candle, you can find an entry on a lower time frame, okay, which is what we learn in VIP, but you can see that it still stayed within the midpoint of that bearish order block, okay? Alternatively, you can actually enter at the next candle at its open, so long as you haven't moved down too much already. You can see at the open of that next candle, we're still within the midpoint of that bearish order block. So it's a perfect entry targeting the sell side liquidity, right? So there's a swing low that we can target from there. Enough range from just the open of that bearish candle at 10:15, which is 15 minutes after the 10 a.m. news release, down to there, you've got more than 100 pips. So can you grab 50, 60, 70, 80 pips from that move down? Absolutely. You can even grab probably that whole 100 pips because you would target somewhere beneath that swing low, okay? All that sell side liquidity. Notice that we have a fair value gap above which reside all this sell side liquidity. We also have equal lows from here to there, okay? Notice that those equal lows come in just above the fair value gap, right? So that would be a perfect target, the fair value gap. Just inside there, you don't have to wait for the full closure. I will simply, if that's the fair value gap and there's a swing low there, that would be my target. So anywhere beneath those equal lows will be a target from this entry here after the 10 a.m. news, having the context behind us that we are at these highs at premium pricing from the dealer's range, and we have a bearish order block and a change in the state of delivery, as I have explained. Okay, so that would be probably the easiest trade that you can identify on that particular day. Something else we can also do, if I go back to the daily chart, I want to show you, we have this big down candle. Okay, the midpoint of that down candle is also important. Let's grab the midpoint of that down candle. You can see that midpoint forecasts the exact high. Okay, so not only do we have the midpoint of the down candle, right, we also have the bearish order block. So let's go to a 15-minute chart. Okay, so you can see that we have a few things, right, that is helping us confirm our setup. We have the dealer's range premium, right? That's anywhere above that blue line. Okay, if we're looking for shorts, it needs to be above there. Okay, what do we see above there? We have on the 15-minute chart this fair value gap that is inside of premium pricing. Okay, great, excellent. What else do we have? We have this projection, this yellow line, which is the midpoint of that daily massive down candle. Okay, should act as resistance. Okay, great. What else do we have? We have, let me make this a little bit bigger now, the up candle, which is a bearish order block. okay, this up candle, right there, that's taken all this liquidity. Okay, that's the high of the day. Great. That's another confluence that we have. What else do we have? We have this engulfment after the up candle that takes out all that liquidity on the left. Okay, the up candle is our bearish order block. And this engulfment of that bearish order block is our change in a state of delivery for the algorithm to then initiate its sell program. Okay, what else do we have? We have the midpoint of that bearish order block. Okay, where price seems to be holding. Okay, fantastic. What else do we have? We have time. Okay, 9:30 to 10 a.m. should form the high of the New York session. Okay, we're waiting for news to complete, which is inside of that candle. It's at 10 a.m. Okay, and we're simply waiting for that next candle, or we can even trade inside of the news candle, so long as we're waiting at least 5-10 minutes. Okay, and we get our entry. Okay, on a lower time frame, there will be a setup, which is what I'm teaching in VIP, along with all these things that you're listening to now. Okay, so we have all these things that are giving us alignment to our setup to go short at the high of the day. Okay, with the context behind us. Okay, targeting any sell side liquidity pools, or even the low of the previous day, which we don't actually get. Okay, we don't tap that exact low, but we get pretty close to it. Okay, so from that particular entry at 10:15, minimum, you could have achieved at least 100 pips, if not more. Okay, so you just got to study the charts, right? Everything you need is in my channel. I'm always teaching you new things and reinforcing those lessons with these additional videos. In VIP, we go into much more detail where we're learning about these types of setups and other higher probability setups and the key times to identify those setups, okay? And at lower time frames to get those sniper entries, okay? So again, this is another reminder that the fee for joining the VIP is increasing. It should have already increased today, but I'm giving you just a few more days, okay? I'm giving you just this weekend now to come and join VIP before the price hike. Right now, you can join and lock in this once only launch price of $97 per month. Okay, it's going to be increasing to $197 per month in this month. It's going to be increasing on Monday, so I'm just giving you this weekend to be able to join. And next year, it's going to be increasing to $497 per month. Okay, so lock in your lower price now, because this lower price, which is the launch price, okay, of $97 per month, will never be offered ever again. Okay, so join the community, be part of a group that is learning how to do this the right way, and we are consistently generating, pulling out 50, 70, 100 pips plus daily, right, from the market, in a market where everybody else is struggling, in a market that is traded by the world's best traders, right? It's $1 trillion market, and I'm teaching students in our VIP community how to take 50, 60, 70, 80, 100 pips every single day on a consistent basis from this very highly competitive market that every other group that I know of is failing, right? Everyone is failing to trade gold with the level of volatility that we are seeing, and the price points that we are seeing all-time highs. It's very difficult for retail traders and even ICT retail traders to be able to trade a market that is at all-time highs. Also in VIP, I'm going to start to look at other markets. We are now analyzing the NASDAQ, right? That's an indice, okay? That's an index that I want to start traders to become familiar with, and we're going to be learning how we can apply the same concepts in the NASDAQ, okay? And we're also going to be introducing specific Forex pairs. So we're really broadening the scope of what we're learning in VIP, okay? And there's so much more that's coming into this community. So I really want you to think about that. Join now where you can at this lower price. Otherwise, you're going to have to pay a higher price if you join in the month of November. I'm just giving you till Monday, this weekend only. After that, price for November will increase, okay, to $197 per month. And next year, it's going to be $497 per month. I'll invite you. The link's at the bottom of this. The link is at the bottom of this video. Join VIP now. I hope this video is useful. I want to talk with you in a future video.